So we find that trading in the Chinese Shanghai Composite Index has been stopped, halted for the day once again. It is down 7% and has definitely broken the downward circuit, which means that there won't be any more trading for today. Second time in just 4 days trading in this new year, you find that the Chinese stock market has been closed for trading. Hardly an exciting scenario, and the effect percolates in other parts of the world. So this is what I've been telling you, that don't take it too lightly. But I've repeatedly said that China is not responsible for all the ills of the world. Basically, the US Fed has, in the wake of the great financial crisis, tried to front load the effect of keeping the stock markets going, and they really tried to pump prime the economy or resort to heavy quantitative easing, and this has led to this situation. The low interest rates that prevailed for such a long period of time led to money going into asset classes where it should not have gone, and now they're deflating. It's as simple as that. China is an economy which is adjusting from the export led economy to more internal consumption driven economy, and because of that all these various hiccups are arising. It is trying, of course, hard to prop up its markets, to infuse liquidity, to even use the currencies by depreciating its currency frequently. But these measures are again artificial. It just goes to show, even in academic theory, you realize now that these monetary policy measures can work only to that extent, and then they begin to loosen the impact on the whole financial markets. In other news, you found that Macy's is cutting jobs because the same store sales during the holiday festival season in 2015 did not come out as up to its expectations. Barclays is cutting its investment banking jobs in many parts of the world. There are many investment banking firms thinking of moving away from London. It's become the most expensive in office space. Uh, some people, misunderstand, and they probably think that New York is the most expensive, which is not. In fact, New York is the 10th most expensive in the world. You would be surprised. London being the most expensive, New Delhi being the fifth most expensive. So, Shanghai and Beijing being the third most expensive. So you can see, the economic power is also transferring now from the west to the east. On similar grounds, you find that there are geopolitical tensions which are on the increase, as I have told you. Yesterday, North Korea says that it has successfully tested a hydrogen bomb. Now, I believe these geopolitical tensions, you can't predict what is happening exactly where, but I believe that this is an era when these geopolitical tensions are only going to escalate. The fall in stock markets is also going to escalate because the conditions are not at all favorable. I've been saying it for quite some time, and the entire liquidity that was thrown in the air, what we call as a wimpy effect. You get that buy one hamburger and you get one hamburger free. It was front loaded, so you had, like, buy, get two hamburgers, you pay only for one. So something like that has happened, and naturally the effects are beginning to show up now. Lots of companies are in a liquidity squeeze. um, Resource driven companies are in trouble. Oil is now at almost 6 year lows, almost to the 2009 levels at $33. It's definitely a cause of concern. Many jobs in the oil and gas industry are getting impacted. A lot of countries are now getting impacted, like Saudi Arabia, which heavily dependent on oil, and I still say that countries like India should be the best benefited by these fall in oil prices. It is for them to take advantage. If they cannot, then it's their own undoing. But these are the countries which should benefit immensely. The various industries within these countries should be the major beneficiaries of fall in oil prices. Anyway, the world stock market should continue to fall. As I said, there could be some minor recoveries from time to time, but I think the trend is definitely downhill. Global recession is on the cards. And do not think that I am just a pessimist. As I've told you, there are pockets of opportunities, but very few and very scarce. There are not only economic issues, but there are geopolitical issues which are all playing out together. So I would advise investors to stay calmly outside and to enjoy the fall. You'll get stocks at much lower prices, so there is no need to rush. Take care. Happy investing. Bye bye.